Hey everyone, last week we got new inflation numbers, so I'll touch on those briefly, then I'll focus on what's happening with the return to office trend. So headline inflation ticked up 30 basis points to 2.7%, while core inflation, which omits the volatile food and energy sectors, only went up 10 basis points to 2.9%. And just about every economist out there was digging through the data looking for signs of the tariffs. As with last month, the tariffs are only marginally showing up in the inflation numbers so far. There was a bump in the cost of appliances, sporting goods, toys, and some electronics, but the overall impact of these goods were partially offset by lower apparel costs and limited increases in the cost of food. As I've said in the past, we probably won't see a substantive impact from tariffs on inflation until September or October, because it'll take a while to burn through existing inventories and for companies to start passing the cost of tariffs on to consumers. So I'll set aside the inflation conversation for a later date and focus instead on what's happening with the office market. One of the data sources we use is called Placer AI, which tracks anonymized cell phone data to measure where people live, where they shop, and where they spend their day. So if a cell phone is basically in one location from 9 to 5, that's presumably where the person works, and from that, they can interpolate whether people are working at the office. And the trend has generally been positive for office space demand over the last few years. As everyone remembers, the pandemic emptied office spaces. In June of 2021, office space attendance was about 29% of the pre-pandemic norm. By June of 2022, utilization was 52%, and in June of 23, attendance was about 66%. But from there, the trend tapered, only reaching 67% in 2024, and the most recent office attendance reading was 72.6%. So the overall trend has been positive for office operators, but the momentum has been modest. Now, while these trends are obviously important to office investors, they're also relevant to all types of commercial real estate. Where people work can strongly influence where they live, where they shop, and even which self-storage facilities they use. And while office space demand has been showing steady gains over the last 4 quarters, we've also seen increased demand for apartments in the urban core. We're still compiling the second quarter data, but as of the first quarter of this year, the average downtown apartment vacancy rate was 4.8%, down 60 basis points from a year ago. And metros with the strongest office space utilization like New York, Miami, Atlanta, and Dallas had some of the strongest demand for downtown apartments. But as a whole, it looks like the office market is turning. We had the massive surge of people working from home during the pandemic, and that ultimately played through to office space demand as leases burned off. Ultimately, the office vacancy rate peaked at 17.2% in the first half of last year, up from 12.2% at the end of 2019. And while it's unlikely everyone in the US will return to a 5-day in-office work week, we've definitely seen increased momentum in the return to office trend. In 2022 and 23, the labor market was exceptionally tight, and many companies were reluctant to push for a return to the office because they feared losing a significant portion of their workforce. But over the last year, more companies have become increasingly persistent in their efforts to get workers back into the office. We've seen it in the financial services sector with companies like Goldman Sachs and JP Chase, which have 5-day in-office policies. We've also seen the 5-day in-office mandate in tech companies like Dell and Amazon. But in recent months, the employment market has softened. With many private sector employers slowing their pace of hiring, the pressure to return to the office will likely increase, and that will likely bolster demand for office space in the coming quarters. And that, in turn, will influence where people live, where they shop, and where they go for entertainment. The strengthening return to office trend will likely influence demand for all types of commercial real estate, and it's a trend that investors will want to monitor as they keep their eyes on the horizon.